Can they manage it properly?
Can they manage it properly? Okay.
That's probably a big one. I mean, the operational real estate, I completely agree, is a big one. I think a lot of the groups, they were the first one to blow in 2007-8. They all had, and frankly, we've been instrumental in restructuring a number of them, but it's kind of a 5-year business plan. We all figured out for hotels that RevPAR was correlated to GDP, and we're all expecting GDP to be about 25% by now, and it hasn't been. So the earnings level haven't exactly worked, ergo the leverage level is not where it should be. And a number of these groups, notwithstanding what I said about distressed real estate and value is broadly constant, the truth is, for hotels, unless you pump a bit of money in it, that's actually, this probably doesn't hold true. And the banks, if you think they don't have a huge amount of appetite to hold, they certainly have even less appetite to hold and fund even more than they have currently. So it's certainly fertile ground for it. House builders is another one, frankly, where we've seen, Cala and Countryside Trading a few months ago. We were involved in a couple of these. There is certainly, the more business-like it is in our real estate definition, the more I think the distress angle makes sense, and it's certainly where we expect quite a lot of activity. Regionally, to come back on your earlier point, we did a non-performing loan workshop earlier in the year, and we asked that question to the attendees, and I think it was, for 2013, it was, I think, 88% UK and Ireland was a hotspot. I think Spain, everyone is expecting Spain, but by the time Sarab, etc., gets set up, if you take NAM as an example, how long time it took to get set up for deals to happen, the view of people in this session is probably more likely to be really next calendar year until things get settled down with UFC property.
So in essence, you can learn from what's happened with the Irish situation and assume that the same length of time, or it might be shortened, I guess, because there's a learning process, but so does that mean that you'll begin to be looking at those in 12 to 18 months, you think?
There'll be opportunities in before then, but in terms of the real flow, it's hard enough to try and take a view on, what is the local property market's going to do when you have don't have a huge amount of comp, when you're not even sure where the government's going to do in terms of which asset they're going to keep and which asset they're not going to keep, and etc. etc. You frankly, the channel of opportunities are somewhat limited. So I think it's more likely, that is a next year problem for it to start going in a big way. Maybe wrong.